The IRS has to do things in due process, right? They have to follow a certain order. I've had clients and seen taxpayers receive what's called a tax levy, which is where the IRS goes in and they either garnish your wages or they get money out of your bank account, even if the notice of federal tax lien wasn't filed. Now, they can't do that if they haven't filed a tax lien, right? Right. But it doesn't have to be filed with the clerk's office. The silent tax lien comes into effect as soon as the tax has been assessed, you've received the CP-14, which is that notice in demand for payment, and you've neglected or refused to pay.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, this is episode 32 and we are not going to get too far off of the beaten path because this is Tax Relief with Timalyn Bowens. So that's exactly what we're going to talk about today. The IRS is wide awake issuing tax liens, cleaning out bank accounts, and garnishing checks. So in today's episode, we're going to talk about how to remove a tax lien. Now, we're going to talk about this, one, because like I said, this is Tax Relief with Timalyn Bowens. But recently, I was in Florida, and I taught a class to a group of tax professionals. So if you're new here, I'm America's favorite EA, and as an enrolled agent, I'm licensed through the Internal Revenue Service to represent taxpayers before the IRS. This could be negotiating the back tax debt. It could be representing them in the case of an audit, but it can also mean handling tax liens and levies. And as I taught this class to an affiliate of what's called NAEA, the National Association of Enrolled Agents, which I'm a member of, there were a lot of tax professionals that looked like deer caught in the headlights, okay? I had EAs in there that were saying they had been an enrolled agent for 35 years. So I had this epiphany that, wow, if these tax professionals aren't getting some of these concepts, what about my taxpayers that are listening to the podcast, watching on YouTube, reading the blog? How difficult is this for them to understand? And you all know my whole purpose in doing this is to fill the tax literacy gap. This podcast is for you. So that's exactly why I'm going to break down how to remove a tax lien. So you may have already gotten the notice, right? The notice of federal tax lien, and it's filed with your county clerk's office. And you're like, what in the world does this actually mean? So let's start with what is a federal tax lien. In the simplest terms, a federal tax lien is the IRS calling dibs on your property until that debt gets paid, okay? Now, you may have breathed a sigh of relief because maybe you're not a homeowner, you don't have any assets, and you're like, whew, they don't have anything to take. But just hang on. It's not the end of the world, but don't relax too much yet. This connects to any property you have. So do you have a car? Yes, it's connected to that. Whenever you go to sell anything, or if you were owed receivables, if you're a business owner and you have clients that owe you, this lien attaches to all business property. It attaches to all receivables, all assets. That can include your retirement account, okay? So right now, while that federal tax lien is in place, the IRS has dibs to all of those things to secure their interest in the debt. So basically, they're going to make sure that you don't run away. Now, in previous episodes, I've talked about the CSED, which is the collection statute expiration date. This is the last day that the IRS can legally collect on a tax debt. Federal tax liens also have what would be considered a CSED. These federal tax liens are self-releasing within 10 years of them being filed if the IRS chooses not to reissue a lien for those specific years, okay? Now, you may be thinking, I haven't received a notice of federal tax lien, so I'm good. Maybe, maybe not. A tax lien is issued after the tax has been assessed, after you receive the CP-14, which we talked about the CP-14 a few episodes ago. It is a notice and demand for payment. So they let you know the tax year that you owe for, the tax that's owed, and they give you a date that they want you to pay by. Isn't the IRS nice? They're so considerate. They let you know what date you need to pay. Well, if you neglect and or refuse to pay that, a silent tax lien is issued. What do I mean by that? Even if it's not filed with the county clerk's office, there's still a tax lien there, and I'll prove to you why. The IRS has to do things in due process, right? They have to follow a certain order. I've had clients and seen taxpayers receive what's called a tax levy, which is where the IRS goes in and they either garnish your wages or they get money out of your bank account, even if the notice of federal tax lien wasn't filed. Now, they can't do that if they haven't filed a tax lien, right? Right. But it doesn't have to be filed with the clerk's office. The silent tax lien comes into effect as soon as the tax has been assessed, you've received the CP-14, which is that notice and demand for payment, and you've neglected or refused to pay. Now, maybe you've only neglected to pay and you didn't refuse. That still opens the door for the silent levy. Now, you may be thinking, but Timalyn, I really can't pay and I don't know what to do and I don't want this tax lien. Well, if you haven't received a tax lien yet, there are things that you can do to negotiate a payment arrangement with the IRS. You can set up an installment agreement. This essentially is just a payment plan with the IRS. Now, there are a variety of different payment arrangements. Go back, I was going to say quite a few episodes and check out installment agreements. But if you owe less than $10,000, you've been compliant, which means the past few years you filed on time, and you typically don't owe, you may be guaranteed an installment agreement, and it's your lucky day. I have an ebook for a guaranteed installment agreement, and you can find that at americasfavoriteea.com. But let's say you're past that point. You already have the tax lien. So right here, we're in the meat and potatoes of this episode. How do you remove that tax lien? Well, there are 4 different ways that you can do it. So get your pen and paper if you don't have it already, because we want to make sure that you know and understand that back taxes shouldn't ruin your life. So let's get rid of this tax lien, okay? Now, way number 1, you may be like, Timalyn, please don't be obnoxious. I'm not being obnoxious, but this is the number 1 way to remove it, and it is to pay the debt. Now, you may be thinking, if I could pay the debt, I wouldn't be here listening to the episode on how to remove the tax lien. Why are you going over this? It's because in 2023, money can fall out of the sky. And when I say that, I have taxpayers that have owed that dibbled and dabbled in cryptocurrency, and guess what? Boom, all of a sudden they had the money to pay. Or someone got a huge signing bonus for a job and they were able to knock a couple of $1,000s out. So I would not be doing my due diligence if I didn't tell you that way number 1 is to pay the debt. Now, if you pay the debt, the tax lien will be removed within 30 days. To confirm the amount, that is owed with the tax lien, because it will be the tax owed for that year, any penalties and interest. The IRS can use that full amount to secure their interest, okay? You'll want to call the centralized lien office, all right? And I'm going to give you the number so you can call them. It's 1-800-913-6050. And when you call the centralized lien office, you're going to verify the amount owed. You're going to verify the years that have a tax lien issued on them. And you're going to request a payoff letter. Now, if you have the money to pay in full, you want that letter so you can knock it out. But if you were looking to sell something and the proceeds of that sale will go ahead and take care of that tax lien, but as of right now, you can't sell it because of the lien, you'll also want this payoff letter to give to whoever you were selling the item to. So way back in the beginning of Tax Relief with Timalyn Bowens, I talked about how to sell your house when it has a tax lien. That would be an example of where you want that verification letter, the payoff letter, to give to the title company to say, hey, I do have a tax lien. However, if I can pay this amount off with the proceeds, they'll remove it and we can go through with the sale. Okay? So that's a pretty straightforward way. Number 2 is a discharge of property. Now, this typically is going to take about 45 days. What we do with a discharge of property is we make a request that the tax lien be removed from a specific piece of property so that we can get rid of it. All right? And by we, I mean you, not me, because I don't have a tax lien. But we're on the same team here today, right? So we're going to remove this tax lien with a discharge of property. And on the form that you have to fill out for this, you're going to list the fair market value of the property. You're going to list who's interested in buying it, what the sale price is, because the IRS is only going to discharge this property if it's in their best interest, which means there need to be proceeds that are going to pay off the lien, and you need to be able to show that and have proof of it. So this process typically takes 45 days. I'm not going to go through the whole form because I try to keep these short and sweet at 15 minutes for you, but you can look it up. It would be form 14135, okay? Now, way number 3 is going to be subordination. Now, not as scary as it sounds. With lien subordination, what happens is the lien is still there. However, the IRS is going to move out of the way. They still got dibs, but they move out of the way so another creditor can get their share first. Now, why in the world would the IRS do that, right? Well, if it's in the IRS best interest, they're going to work with you so that you can pay somebody else off. Now, an example of this would be right now, maybe you're in an installment agreement and you're not able to make the full payment each month that the IRS would like. Well, they may move out of the way so that you can pay someone else if once you get that other thing paid off, it's going to provide you with more money to pay them. See how that works? Nothing in life is free, especially not with the IRS. So way number 1, we're going to pay the debt in full. Lien gone in 30 days. Way number 2, discharge of property. We're looking at 45 days. Way number 3 was subordination, 45 days. The last way we're going to look at here is requesting a lien withdrawal. So if your tax debt is less than $25,000, you are set up in a direct debit installment agreement, which means, yes, the IRS has your bank account information and it comes out automatically on the day that you choose. You have no defaults as far as an installment agreement, which means you've set up an installment agreement, you've made all of your payments on time, no dishonored check penalties, you are good to go. You also have your most recent tax returns filed, your withholding is good at your job. If you're self-employed, you're making your estimated tax payments on time, and you've made 3 consecutive payments, you can just ask the IRS to remove the lien in good faith. This is called a lien withdrawal. Now, if you know that you have an installment agreement set up and you pay every other month, you know that your withholding is not right, don't even bother with the withdrawal request. However, if you're trying to do better about things, that is a goal to work toward. Getting on that direct debit installment agreement, make sure your withholding is good. You make 3 consecutive payments in that direct debit installment agreement. then you can request the lien withdrawal. All right. So we have our 4 ways. And before I go, I want to make you aware of something. All right. So this is a huge beware. Okay. Once you have a tax lien, one of the things that I see happen often is people will think they can put their back taxes into a bankruptcy and get rid of all of the back taxes. And that simply is not the case. First of all, you can't even put a tax return into bankruptcy unless it meets the 3-year, 2-year, 240-day rule, which means the tax return was due 3 years ago. You had to have at least filed it 2 years ago, and it had to have been last assessed 240 days ago. All right. If we meet those qualifications, so it was due at least 3 years ago. So if you're listening, right now we're in 2023, you could not put your 2022 in there, or your 2021 or your 2020. Okay. But if you meet those qualifications, beware that whoever you are working with should let you know that if you have a tax lien, a federal tax lien, you should not put that into bankruptcy. And here's why. The IRS has secured their interest on this debt. So even if you put it in the bankruptcy, you will end up paying the amount of the lien back anyway. All right. So bankruptcy may be a very good option for you for the debt that is not being attacked by the lien right now. So this may be a situation where you would want to work with a bankruptcy attorney and a tax professional so you can make sure you have both of them squared away. All right. Over at Bowens Tax Solutions, which is my first baby, we help with tax lien removal. But, after listening to this, you may be like, this was really great information. She's kind of quirky. I don't really want to work with her. That's fine. Make sure that you take the information that you learned here today to find the correct professional for you. But you may be thinking, she's kind of quirky. I think I do want to work with her. If that's the case, then you should go to bowenstaxsolutions.com and book your tax relief consultation with me. And if you book it within the next 30 to 45 days, you'll actually get to talk to me about your tax situation, how to remove the tax lien, and get these back taxes behind you, because back taxes shouldn't ruin your life. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.